Good morning, Steve Free in Chicago with the morning grain comments. Well, it's Friday, and I think a lot of traders are glad that it is Friday after yesterday's overall meltdown. We saw stocks break, especially in the bank sector, because of one U.S. bank sold out of $20 billion worth of treasuries that they bought at the low of interest rates at a $1.8 billion loss. Now, this is not concerning the overall banking picture, but it does raise concern about bank portfolios if some of them did the same. So a lot of scrutiny now will be on the big banks to see if they also did something similar. We also noted that one of the crypto banks decided to close, which is offering resistance to cryptocurrencies, especially in the Bitcoin. Over the grains, a lot of traders were scratching their head as why we had such steep losses. I think that had a lot to do with money flow and liquidation that was going on in some of the financial markets. Soybean market is back near support. Yesterday's export sales were disappointing with net cancellations from Pakistan and also out of the unknown. We're still seeing a lower Argentina crop, but Brazil continues to offer beans for export, and they also offer meal for export. So the bean market kind of comes down to not only money flow, but also our cash markets and whether or not the basis levels will begin to firm up and spreads narrow to show the need to buy beans into the pipeline. The export sales numbers suggest the USDA might continue to lower bean exports and raise the carryout. But as we get closer to April 1st, we start looking at next year's weather conditions and crop conditions in the March 31 acreage report. Over in the corn, also steep losses, even despite the fact that we had record export sales. We are the cheapest seller of corn in the world, with basically South America out of the market, and Ukraine have a lot of uncertainty as whether how much corn they're going to export. Still no news on the extension of the Ukraine corridor. And we also note that our new export commitment by the USDA's goal is 29% behind a year ago. Our total commitment right now is down 39%. A little bit of concern about too much rain in the south, slowing corn plantings there. Over in the wheat, we continue to make new lows in the wheat market, both here and globally. Russian prices are still below U.S., but now French, German, Baltic, and Balkan prices are below Russian prices. And so that continues to offer resistance to the marketplace, despite the fact Southern Plains is dry, Canada is dry, Australia could be dry this summer as we switch from La Nina to El Nino, and that there's no real wheat exports out of Argentina. But still, Europe and Russia ending wheat stocks could be record high. We're watching a little bit of maybe some lower winter wheat acres in Russia and Ukraine because of the war, and Russia because of fall planting conditions.